afternoon, everybody. Welcome to Trader Merlin Show. It is your Tuesday edition, Taco Tuesday. Yes, tacos for everybody. Hope you all did well out there. Good to see you, Tibor. Been a while. Terry, Larry, Lori. Well, we got lots of T's and L's today. And Skilled Stocksman, Ricardo. Good to see you as well. Joachim. Les, you better step up your game, buddy. Gary's beating you. He's first in the last couple days. Anyway, good to see you all. Today's topic is going to be derived from a listener question, which was, well, there's the graphic done by AI. Gotta love the small, tiny little barrels of it. And apparently they have giant barrels like this, too, in AI. This question was brought in by Armin, I hope I pronounced that right. It says, what's your forecast for oil? Shouldn't it rise in summer months? Now, I am not I've traded oil. I've certainly traded oil and oil futures and oil ETFs and derivative products, but I am not an expert like somebody like John Rowland who knows all the ins and outs of it. So all I can give you is kind of a technical perspective and what I think might happen. But again, I'm not a financial advisor. This is not financial advice. It's just me spitballing ideas on what I think may happen with the price of crude oil over the next few months. So I'll start there, and then we'll go into a bunch of other listener questions. As Skilled Stocksman says, yeah, I can't wait to see what oil does either. Regardless of whether I'm bullish, bearish, or indifferent, I'll just have my plan in place and hopefully act on it and make some money on it. So let's start off there, and then later on I'll do our top 7 markets like we always do. Oil today was your biggest gainer, up 2.37%, but let's take a step back at the big picture. I'm on a weekly chart right now, and really since we hit those April lows back in 2020, it's been on a monster tear, but for the past year, really been just drifting lower and lower and lower. Now, the good news for anybody who is bullish on crude oil, it looks like the descent has slowed down a little bit. Now, I've got way too many lines on this chart. Well, let's flip it back to a daily, and then I'll dive into it from there. There we go. And I still have a lot of lines on this chart, but let me get rid of some of these. Yeah, I guess I can leave them for now. You look at what's going on with crude oil at this moment in time, and yes, it has a fairly wide range, but for really one full year, it's gone nowhere, right? You can go back here. This is December of 2022. We can go further back. Let's go back one full year, and I'll put a yellow box around that just so we can see the last year of activity. So here we're on May 23rd. Oh, yeah, well, okay, never mind. I take that back. We've been decisively down. April, May 23rd. Okay. So this yellow box now encompasses one full year of trading. So for the year, actually been a pretty good sell-off. For the past 4 or 5 months, though, which is the much smaller portion over here on the right-hand side, which I will now zoom into, this piece right in here, looks like consolidation. Now, granted, we've had some pretty big swings up and down, particularly in that March and April period, where we had big swings up to the top and then all of a sudden crashing back down, but establishing this yellow box that we are currently in. Now, from a technical perspective, we're still in the middle of the range, so I don't see anything that's really that exciting at this moment with crude oil. So I guess you have to start looking at what are some of the bigger factors that might be pushing this thing around in the near future. Now, I don't listen to all the OPEC meetings like I do with the FOMC meetings, right? I just feel like the FOMC is much more powerful and it impacts more markets. However, there were some comments that came out recently by the Minister of Energy, the Saudi Minister of Energy. And he basically made some comments towards short sellers that were really interesting. He says, the short sellers will feel some ouchie. That's about as aggressive and foul language as they can get over there, I guess. Will feel some ouchie like they did back in April, which implies that the Saudis may do another rate or a production cut. Now, if that happens, we'll probably see another surge. Now, let's just go back to when we had the previous production cut from OPEC and from the Saudis. That was back here in April, and you can see right here when it jumped from March 31st to April 1st, you had that a big pop-up in price. It rallied for a few days, but then gave it all back. So you would think production cuts would help. Production cuts mean less supply. As long as demand stays the same and you have lower supply, then things should get better for oil. In this case, though, it didn't. I really was surprised to see it fall as much as it did. I did put a line in the sand here, which is these lows that go back into 2021 and 2022, which is right around $62.25. That's kind of the bottom that I see this thing getting to. So bottom end of this range, $62.20. I am bullish for a couple reasons. Right now, I'm not interested in buying any oil just because it's not really going anywhere, at least in the short term. We could start to put some lines on here and establish points where we might be happy buying crude oil long if you are on the bullish side of things. But right now, I think it's just more of a wait and hold. Now, to go back to Armin's question, what's my forecast? Well, I guess it depends on what time frame and how long we're looking. Long term, I'm bullish on oil. It's kind of like I'm long term bullish on gold, kind of like I'm long term bullish on the markets. They're just built to go up over time. As far as your comment, should it raise in summer months? Define our summer months. What's our range for summer going to be? Is that going to be May through September? Do I use that window of time? You guys tell me what would be the most appropriate time to do for the quote unquote summer months out here for crude oil, and we'll look at that price chart, because I think historically people view the summer as, yes, it is the time of year when you get more traveling, but that doesn't necessarily mean that crude oil prices are going to rise. And we can look at that historically. I'm just waiting for you guys to tell me what you think would be the appropriate month selection to say this is summer. I guess I could Google it, but I know I always like the interaction from you guys, although it takes forever with this delay on here. So let me see. What are the summer? Yes, and Patel, that's another one I was going to talk about is, another factor is there's a lot of wildfires going on in Canada. Their production has been cut quite a bit, and that's going to impact. Now, granted, they'll get back online, but there'll be some damage to the facilities, depending how close those wildfires are, and distribution channels for it. So yeah, that's a big piece. Let me read it all in its entirety here, Jay Patel. Alberta currently is facing 91 wildfires with 27 burning out of control. Oil and gas firms here shut down production. Yep. At least 319,000 barrels. Exactly. When you drop, I didn't know it was 3.7%. So thank you for that one, Patel. I appreciate it. That's a pretty big drop, especially for the U.S. being our neighbors to the north, and we get a lot of oil from them. So that could have an impact, but they're literally just shutting down facilities. They can turn those back on. So this is not going to be, a shutdown that's going to last years, but it might last a month or two, somewhere in that area. So that's another piece that says, hey, supply going to start to drop, which means the prices for the pump here in the States might start to increase as well, because that's more of a direct oil connection for us. So yeah, I've got June to September, June to September, June to September. Done. Let's go look at that price chart. And I will put this on a monthly just because, I'll do a weekly. It's just going to be easier if I do it that way. And I'm going to try to create a little box that goes June to September, because it should always be right around the same size. So here is the June to September. There we go. That's June to September, this box, right? So let's just look back in 2021. How did it look? There's your June to September in that yellow box. I would argue that just pretty much just went sideways. Not a lot of real direction there. And that's the summer months, right? That's maybe I'll go to the end of September just to make it a full month. Okay. So even with that, not really much of a clear sense of direction for 2021 with regards to oil prices rising due to summer travel by citizens. Now let me go here to the next one, which will say June to September, and there it is, roughly right there. I would say pretty clearly down, right? An ugly sell-off there for crude oil in that window of time. So already we've gotten two fail, or one was meh, the other one was a fail, meaning prices didn't really rise. Let's go back and check 2020, which is going to be a complete outlier. Actually, forget 2020. That doesn't count. That's just a year we just want to erase from our memories for many friends. So let's go to June to September. Come on, right about there. And that was pretty flat. So Armin, when you say shouldn't it rise in summer months, I believe that is a preconceived notion that we have as consumers that if price should rise in the summer months because people are traveling. What we just looked at in three separate examples, 2019, it went sideways. 2021, it went sideways. And in 2022, prices actually declined significantly for crude oil. So I'm going to take that belief system and kind of chuck it out the window. I could keep going back over the timeline to find out if it worked more, but I don't want to take up all of our time here. Depends on which part of the world we're talking about. Good point. I'm in California. Yep. Does UNG have a reversal coming at this level? Let's get to that one. We talked about that basing the other day, but today was the last couple of days have been pretty ugly on that one. So, my forecast for oil, Armin, is pretty simple. I'm looking at this price chart thinking everything stays the same until it doesn't. One of Newton's laws of physics is something stays in motion until it's met by an equal or opposite force. At this point right now on this crude oil chart on a weekly, I don't really see any clear direction that it's wanting to go anywhere. right? Going back until November of last year, we've just been chopping back and forth and back and forth. So I will do my yellow box, as I love to do, throw that around that price and say, look, until it gets out of that range, I'm not that interested in doing anything. I know what a lot of you are thinking. You're saying, well, it's at 72.90 right now. You're saying you're not going to buy it till it gets above 83.50? Yeah, that's it. That's kind of the way that I am looking at it. So I'm not that excited on crude oil. I do think that the big swings are going to come because of what the Saudis and OPEC and Russia do. Right now, from the sounds of it, who knows if I believe the data that's coming out, from the sounds of it, Russia is increasing production. They were supposed to cut, right? They were all spiteful, going to cut their production. Well, they haven't. They're just keep on cranking out oil because they need money as well. So I think all eyes are on Saudi Arabia and OPEC and what their decisions are. If that energy minister is hinting, or the hints that he has dropped come true, then we will probably see another production cut here, which could push prices of oil back up. And, then it becomes a question of where is it going to head to, right? The price chart's pretty clear. I would argue that your next big stop is going to be back up to these highs that we have, right around that 82.25. After that, you've got about 92.70, right? That's just this previous highs where I think they might be targeting. So that kind of puts your next two stops on it. That's your rules, and that's what you do. Exactly. 100%. Larry says, like selling man, go away. I mean, honestly, it's one of those things. If you're an oil trader and you looked at those last 3 summer cycles that we just looked at, it doesn't really paint a great picture. If anything, I'd be kind of bearish during that period of time just because of what happened last year. But the 2019 and the 2021 periods, those didn't look great. It was really kind of lackluster. So maybe it is that sell in May and go away. Again, not just saying go away altogether, just find something else to trade or invest in that might help you out a little bit. A few weeks ago, Japan started buying Russian oil, even though the U.S. did not want this to happen, right? Yeah, that's a strange one, considering that the U.S. still provides them. I believe this is still the case. I believe that the United States still provides the military for Japan. You gotta love it. After World War II, after all these years, we still provide a military for Japan. Okay, doesn't make much sense. If you look at the ease of access to the oil, I would say for Japan, it'd be easier for them to get it from Russia. It's just closer, right? So it's much easier, less shipping costs, transportation. So I kind of feel bad for Japan. Shouldn't they be allowed to buy oil from whoever they want? Does that start to sour relationships with the United States and Japan? Who knows? This is one gigantic, political game of hatred from country to country to country. But yeah, I read something like that as well. And who knows what the U.S. is going to do? I doubt we'll put, sanctions on Japan because they're getting oil from Russia, but stranger things have happened out there. So all in all, and I don't know about that, Margaret, if the summer blend of gasoline is more expensive. That I don't know. You probably know more about it than I do. So for the short term, I'm impartial. I don't really care. I'm looking at this price chart. I don't have any play in crude oil right now. I don't plan on making any plays. If I go shorter term, there might be some opportunities here. I see some decent supply and demand zones that I could play within this range. But I probably think it's better, safer, and easier just to play this range, right? Play that big yellow box that I've got there that goes from a low of about 63.50 to a high of about 83.50. So you got a $20 range in there. Great, some great opportunities. But until it really breaks out of sideways action, I don't think I will be looking to play it. My gut tells me you'll probably see this move to the upside, start to rally back to the up once it breaks. But it might take a couple of months before we get above 83.50 on crude oil. Looks like price action will drop down to the previous red candle tail. Is that what your thoughts are? You're talking about this guy down here, this long tail down here? That's why I've outlined the extremes of the range. I'm kind of using that lower tail there as the extreme of it. I would assume that if it gets down to that level, it'll have a little difficulty going below it. But, remember, there's a couple of external forces here that we have to consider. And this is what makes me typically long-term bullish on crude oil. And that is, it's a finite resource that is consumed. Right? Gold is a finite resource that we don't consume. It just moves around from the ground into physical possession. You don't destroy gold. But crude oil disappears. So when you look at a country like United Arab Emirates, it was really fascinating when I was there. I went to some of the museums and just kind of learned a little bit about the history. Unfortunately, my brain doesn't remember it all. But 50 years ago, Dubai was just a sand village. It was just absolutely desert with small huts and very, very small, no real infrastructure. And then they got oil. They found oil, and all of a sudden, you go down there today and it's just an 8-lane superhighway that cuts through just some giant skyscrapers on the left and right of you. And then as you get through it, all of a sudden you end up in the desert, right? It's just, you enter on the desert, you see this huge oasis, which is Dubai, and then all of a sudden it goes back to desert. They were saying that there is peak oil for them. They've calculated, how much oil they have, and they go, if at 20, 30 years, we will run out of oil. So it's in their best interest to sell as little as possible at the highest prices possible. So when you look at this price chart, and this goes same thing for Saudi Arabia, it goes for any country that's extracting oil from the ground, their oil will run out someday. So, think about it. If I'm OPEC and I see this drop below, let's say 63.50, I am going to the meeting and I'm pounding the table saying, all of you need to cut production. We need to jack the price up, because what you're doing is you're now selling the same amount of oil at a much lower price, where we could sell a lot less oil at a higher price. And therefore, you'll see this thing move back up. So that's always been one of my kickers for price moving to the upside for crude oil, is just they have the power to say, we're going to cut production, and we'll keep cutting until price stays up above a certain amount, and we'll sell it at that price. Most of us here in the U.S. that are consuming petroleum products, we bitch and moan about it. We complain, oh, well, this, that, the other thing, costs too much money. But I'm not going to stop driving my car. Yeah, I have a fossil for burning vehicle. I am a Toyota guy. So like Margaret's got the 4Runner, I have a Toyota Tacoma double cab, TRD, 4x4. Love it. Love my truck. But, I'm not going to drive less if oil goes from $4 to $7 or $8. Now, I may not make the trips to Northern California, the long distance ones, but all my normal around town stuff, I'm not going to cut that at all. I'm not even going to consider it. I may not travel across the country, but I think the power there is that these guys do have the power. The OPEC countries do. Yes, logical for them to Dubai, Andrew, but also, Canada has a lot of other resources, right? So you look at Canada, there's a lot of other things that Canada has, whereas Dubai is pretty much a one-trick pony. Yes, there's some business perks of being in Dubai, but without all that money from oil, that they're going to struggle. So it's Dubai, it's Abu Dhabi, it's Saudi Arabia, it's Kuwait, Qatar, Qatar. A lot of those countries, it's predominantly oil is what's funding everything. And if that dries up, and they'll just turn back into desert towns. So what's great about what Dubai has been doing is they become this business hub. They're making it tax efficient. There's no taxes there. So a lot of businesses are moving to Dubai. I actually thought about it at one point, but Dubai just doesn't appeal to me as a city. I traveled around a little bit and it just was didn't really like it. Well, the culture things were a little bit too much for me as well. Prices are much higher in other countries compared to the U.S. Yeah, I tried driving, Japan. Look at oil prices in Japan, or go to Europe. You're like, oh, people do this all the time. They'll go from U.S., and let's say it's $5 a gallon, and you go there and you go, oh, wow, it's only $3. Yeah, it's $3 a liter. Way more expensive if you calculate out to per gallon. Maybe work from home and get people to ride bicycles, get America in better shape. No way, Blue Diesel. You know why? Because we all got electric bikes right now. It's the new thing. Everyone's got electric, especially where I'm at in SoCal. Everybody's got electric bikes. It's just kind of insane. Anyway, that's my take on it. Armin, I don't really see anything that exciting on crude oil right now. I feel like it's just basing in a very wide range. I do think you're going to get some shock announcements here, which will pop it out of this range. But I think everybody, for all intents and purposes, is happy seeing it stay stable, meaning not have huge swings like it did, but let's see it just kind of stay and oscillate between 70 and 75, right? I think even the U.S. government would be happy if they saw something like this for the next 6 months where, yes, prices didn't drop, but if they stayed condensed in, let's say, that little range, I think people would be happy. It becomes a little bit more predictable with regards to costs and expenses, but, who knows? I have a feeling you are going to see Saudi Arabia make a production cut announcement here in the next month or so. They usually don't mince words or mess around, and having that Saudi energy minister say, like they did in April, they're going to feel ouchies, which I thought was really, really funny. Colombia's cheap, 18 cents a gallon. Yeah, so is Venezuela. When you go to Venezuela, gas is cheaper than water, but you want to live in Venezuela? Anyway. All right, so that's the first talk track was oil. Let me go into current markets, and then I got two other questions. I have two more. Got one from Margaret about criteria for choosing stocks or ETFs. Great. And then Tim wants to know, banking system, is it stable? Are there deals out there? There's always deals somewhere, Tim. So let me go through our top 7 markets here just so we can quickly take a peek at that. Was not the the best shining day for the NASDAQ. About time they're giving some profits back. Tomorrow we actually have a very big announcement. I'll keep you hanging for that one until the end of the show. NASDAQ was down 1.25% today. Technically, no big deal. I mean, I think we'd all agree this is due for a pullback. It needs a pullback. Gotta take a breather here. It's had a hell of a run, so no big deal that the NASDAQ took a hesitation breather today, down 1.25%. Same with the S&P, but the S&P doesn't quite have the same up momentum that the NASDAQ did. Let me get that line out of there. I still think we are on an ascending triangle. I still think this 43.13 is going to be your target here soon, as long as we don't break any of these most recent lows you see on the S&P. The trend is your friend till the bend at the end. Let's see where this thing can peak out at. Dow, 0.68% slide. It is one of the uglier ones out there from a technical perspective. You notice it doesn't seem like it's following any of them. So here is the Dow. Just take a mental screenshot of that one. There's the Dow. S&P looks way stronger. NASDAQ, much stronger. And then the Russell is really the ultimate outlier. But the Dow just really surprisingly flat and uneventful, down 0.68% today. Technically, leave this one alone. The Russell, at least, you have this sideways basing that we've mapped out between the range of 1545 and 2045, so almost a 500-point range there. But it almost feels, and I hope it does do this, like we've got a little area right there that could potentially be the next consolidation zone where things get real quiet and start to go in just a small, tight little range here. So that will be interesting to watch and see if we get this range compression here in the Russell and stick near those lows. Podium-wise, gold. I don't know what that means. A biotically? Biotickle? What are you saying there, Skills Auction? You don't believe oil is replaced this way in the earth? I'm not quite sure I get that one. I do know that, there is oil is being created, but the process of creation is compression of fossils over time. It's not like, you're going to create, methane, right? That's easier to create than it is to extract crude oil. So I don't know. It's being created, so I'm wrong there. It's not like there's not new oil being created, but it's a very slow process. We're talking millions of years. Okay, so here's the gold chart. Down 0.14% today. Silver as well. They were just kind of floundering. Silver's down about 0.5%. So 1974 is where we saw gold finish. Technically, what do we got? You do have a hammer formation, which I guess is nice. Maybe that gives us a nice little pop-up tomorrow for gold, but really nothing that exciting here. There's no real demand zone that it's sitting on. So all I have to hang a hat on is we've got this small hammer formation today. Bitcoin, 1.25% gain, now just hugging this line at 26,666, so sideways action. Okay, there we go. Thank you for, let's see, abiotically definition in a way that involves the absence of life or the absence of living forms. Oh, wow, now we're getting a little too philosophical for me. I don't know. I'll leave that one alone, guys. That's outside my range of mental capacity. Someone else can start a podcast on abiotically forming oils. So Bitcoin, super tight consolidation. You haven't seen this type of compression on Bitcoin in a long time. Right now, just glued to this lower demand zone. So not even demand zone, really, just line in the sand. We'll call that support, not really a demand zone. But all in all, the longer it stays there, I feel the weaker that it is for Bitcoin. The worse it's going to be. I kind of want to see a nice little pop up here. I'd love to see a rally and get back up above 28,000 on Bitcoin, but we're not seeing really any life at all over the past 2 weeks on Bitcoin. And finally, we already looked at crude oil. There is your CL chart. Just so I can get through those top 7. Dollar index today was up just ever so slightly. But notice, you look at this chart. What does it feel like it wants to do? It feels like it wants to break higher. So I'm going to leave the old head and shoulders there just for giggles, but it feels like that's over. It feels like we've removed ourselves from this current downtrend, although it has not broken the high, right? To really make it, it's got to get above this high that was achieved at 105.65 was the high. Well, actually 105.72. So once we get above 105.72, things look better. But all in all, Just the last couple weeks been looking great for the dollar index, which should put more downward pressure on the equity markets. And I guess lastly, talk about bonds. Nothing really that exciting here, except the fact they've been on a monster run for the 10-year. 3.69, call it 3.7% yield for that 10-year right now. Whereas just about 2 weeks ago, we were tinkering around 3.35. So nice pop up of 35 basis points for the 10-year bond in a short period of time. And again, the higher this goes, the higher the cost of capital is, and the more pressure it puts on government. And I think that this is a reflection of the potential default here for the U.S. markets. Now, again, I think that there's like a small percentage chance that we will default. I can't believe they would be that stupid to let it happen, but it could. And I think part of the reason you're seeing these yields jump is because of that. People go, nope, not touching government bonds right now. And lastly, let's go and look at the Fed funds futures, because for the next couple weeks, all eyes are going to be on what the Fed is going to do. And we are now sitting at a 30% chance. So it's slowly shifting. You guys notice, it seems like every day it's been getting more and more likely they're going to get a 25 basis point increase. Now we're at 30%. Whereas, a couple weeks ago it was only 22, then 23, then 25. And here we are today at 30%. So this will be interesting. Getting down to the finish line here. June 14th is the FOMC meeting. And that will give us that definitive rate increase or halt. And then see what the Fed says after that. Skilled Doctrine says S&P weekly chart 43.27 to 42.20 rally-based rally. Do you see this as a major supply zone? So let's bring up that chart real quick. Come to my S&P. And I will just drop some lines right where you said. So let's click that first one. Come on. What did you say? You said 43.27. All right. And now 43.27. All right, you're going way up there. All right. And I'll add the second one on here. And that one that you said was 42.20. Okay, so you think that this big guy is acting as a supply zone? No. And again, this skilled stocks, but this is where it's just a difference of how we view specific price formations. When I draw my supply zones, I am the stingiest that I could be. I'm looking for these very tight supply zones. So I know what your supply zone is very wide. I mean, you've got a 100-point range on this one. For me, if I'm looking at this area up here, I'm actually going to be looking at probably there. So mine would be 42.80 to 43.27. So that's about a 47-point range. So my supply zone would be a little bit tighter. But could there be one in your range? Absolutely. It doesn't make anything wrong. It's not like it's wrong. Again, it's all an art to this. But that's the level that I see. And, if you look at that level, I'll zoom out a hair here so we can see current price related to it. What I'm referencing are these two blue horizontal lines. We look at that level, you notice that this is not a fresh zone. I mean, there's really movement back in here going all the way back into April and May of 2022. So you could argue that this peak that we're using as that level is actually the retest. So I don't think there's any real strong supply there that could force us down. But I do know that people will look at that peak that goes to August 16th, 17th of last year and use that. So there is some psychology behind it that will draw sellers to that zone, but we're not quite there yet. Judging by the chart, though, it looks like we're going to get there. Well, we have 7 days-ish to get to the debt ceiling agreement. Yeah, I just saw a chart of the Treasury's account balance, how much they have. Oh man, what an atrociously bad-looking chart. That's got to be just an embarrassment. It's one of those ones, if I felt like if I was nominated to run the Treasury, I just have to look at that and go, I can't do this. Because clearly this is wrong. I mean, whoever's running the show here and figuring where the money's going is doing an awful job. If this was a CPA, I'd fire him. Yeah, anyway. Okay. Let's see. 7 days, more stupid games. Yep, totally agree, Margaret. It's really pathetic. Hey, Merlin, they told some friends to watch your Bitcoin dart chart video and they instantly bought it. Well, I'm not trying to get people to buy it. I'm just making an informed decision. I feel bad now because if someone buys it and they lose money, it's on me. Look, I'm putting my money where my mouth is with the Bitcoin thing. I've got Bitcoin that I'm not going to touch, not going to sell it. Only thing I'm going to be doing is potentially moving it to another location to secure it. I don't know if you guys heard the drama now with Ledger. What happened with Ledger is just such a classic story. It's almost as bad of a screw up as what Bud Light did. The stories I'm hearing now is they're saying that Bud Light was proposing doing a special for $5 for a 12-pack of Bud Light right now because they can't sell it. Like their sales are down so much because of what they did. Well, Ledger, they're shot themselves. I don't know anybody who's gonna be buying Ledgers now. Now they're backpedaling with their Ledgers. So very interesting seeing all these very bad marketing decisions going on. I think these are two businesses, Ledger and Bud Light, that will get written into collegiate textbooks about what not to do. What should each one of these companies have done to have not killed their business, which they have done right now, which is just nuts. All right, let me see. Merlin, you can't think with common sense when it comes to government. I know. You think you would be able to? Just drives me nuts. Like, how do you get to that level? It reminds me. It's like you see these people that have a Tesla, and they pull up to a gas station, and they're literally with the gas pump trying to shove it in the electric slot on the Tesla. It's like, how dumb are you? Like, how have you made it 30, 40 years in life if you can't figure out that your car is electric and that's gas? Oh man. Anyway. What's your thoughts on the alternatives market? My company is developing more and more in this sector. I know it's newer for advisors to have on hand. Well, what do you mean by the alternative sectors, Ava? To me, I look at this all as being, one second. Oh, exciting day. Exciting day. I'm building a cart for my dog so he can get inside the cart behind my e-bike, and parts are arriving today. I'm all for alternatives. If you're talking about alternative instruments, are you talking annuities? Are you talking, getting into things like uranium? I'm a believer that you should look at all spectrums of the market and say, okay, what are the risks? What are the reward? What can it do for my portfolio? And again, we all have different goals and objectives. So if I'm somebody who's 65, about to hit retirement, I need to have a little bit more conservative goals and look for income generating assets. And if I can find even annuities, I know people hate the word annuities. If I can find annuities with the right terms and the right fees that guarantee me 3, 4, 5, 10% rate of return, then it might be worth it for me, right? So I am all about alternative investments, just investments, period. I think we lump them into one giant category. I'm all about investments, and some would call them alternative, but I'm all about energy. I'm all about natural resources as alternative investments as well. Please share a pic of the dog when he's in the, yeah, I will. Bud read the new Koch Harvard Business School case and said, yeah, hold my butt. Man, what a crazy case study. Read someone did that today with their Tesla. You see the videos of it all the time, Lisa. It's just mind-boggling, like mind-boggling. Yeah, that's actually, you got to hand it to him, Margaret. Margaret says, did anyone see the video of the guy had a gas generator in the trunk of his Tesla? He used it to charge his dead batteries. I doubt it would be to charge it. Must be a joke. I don't know if he was charging it or just trying to keep enough juice in it going and maybe extended the battery life. I don't think the output from that generator is high enough to charge the Tesla battery, but it could be. The brilliance of some people. I've actually seen where people have AC units mounted on the hood on the roof of their car, like those ones you put in windows, and they run that to their battery. And I was like, people are creative at times. There's creativity, and then there's stupidity, and there's a fine line between the two. So let me go to Margaret's question here. And Margaret said, what are the criteria that you use for choosing the underlying stock or ETF when buying or selling options? So the main thing for me is it's got to be something that is in play, meaning it's got to be a popular one. I don't want to trade something very obscure that's got no liquidity, no open interest, and no options on it. The spread, I want the spread to be somewhat tight. So what I generally am trading, and again, I'll reference the 1% portfolio, Margaret, just because that's kind of the main goal I'm shooting for now is let's just get consistent income over time. Oops, I already went past it. So you guys know I generally will include in that 1% portfolio these ETFs here. And these are your S&P sectors. And most of these have fairly decent volume. Some get a little light. Like, for example, today, I sold puts on XLB. I sold the 75 puts on XLB today. I got over 1% for the next 20 days. So fine with that. XLB, let's click on that. So here's XLB. And if you notice, your demand zone is right down here, right around $75, that blue spot. So I'm like, all right, I'm happy to buy it there anyway. So I'm collecting 75 cents worth of premium for the next 21 days. So love it. It's over 1% rate of return. And it's at a level where I'm happy to buy XLB. I think materials is going to be fine. So to me, no problem, Alan. Good to see you. Have a good dinner, my friend. So XLB, if you look at the volume on it, this isn't like a incredibly heavy volume, but it's still got 3, 4, 5 million average daily volume. Some of these other ones like industrial, 11 million. All these ETFs are not extremely, but significantly liquid. Here, even XLV, right, getting into healthcare, 8, 9 million a day. Here is consumer discretionary, 3, 4 million. So all of these have good enough volume where I feel that there's going to be plenty of liquidity. I know there's options on all of these, so I don't have to guess. Occasionally, I do go to, and the other reason I like these, Margaret, is these are diversified holdings. What I don't want to do is I don't want to get myself into an option trade where something gaps up 20, 30, 40, 50% like you saw with some of these financials. That said, I do go out and play individual securities. For that, it's generally playing hype. I'm playing the excitement or fear that's going on in a specific security, but it's got to have liquidity, right? I need to make sure that there's average daily volume on the underlier is significant because that generally translates to liquidity in the options. If the stock is illiquid, then I'm probably not going to find the options to be very liquid. So those are the main criteria for me. If I look at it from the 1% portfolio approach, I'm trading exchange-traded funds. I'm trading things that are diversified and liquid. And there you go. And, again, I'm looking generally for when there's panic. For example, you saw today, XLB was the biggest loser today, right? Here's XLB. It's actually been a loser for the past month. And if it keeps on drifting, great. It'll get to 75. I will own it, but my actual buy price technically will be 74 and a quarter because I collected 75 cents for the premium. So that was the one that I made today. I sold some calls against some silver and other accounts today because I have a lot of silver right now, which wasn't the greatest looking, but yesterday I sold some at 22 and then I sold a bunch today at 22.50 just so I can let it run a little bit because I do think you're going to see silver start to move back up. But that's the main criteria, Margaret. I'm not trying to complicate it. I'm trying to keep things as simple as possible with regards to the underliers for the options that I choose. Now, every now and again, you get something that's super exciting and massive pain and fear like AMC or GameStop. Those ones I will trade. I do like those. Just, you got to be careful because you can get burned very, very quickly. I think Target is pulling Bud Light. I'm hearing a lot of mama bears angry right now all around me. Yeah. And, it's really forcing a broader discussion amongst retailers. Target also has all kinds of tucking. I saw some lady post a video of they had undergarments that you could wear that were for tucking and concealing that you were a boy type things. Like, wow, man, we really shifted greatly as a culture. But, okay. Yeah, and, this might be one of those things that starts to polarize us even more is our viewpoints on these different pieces like that. But, yeah, I didn't hear about Target pulling Bud Light. I can't imagine that because they all those Bud products or Anheuser-Busch products, if you're Bud Light, if you're Bud, do you play hardball and say, well, we're yanking all of our product from your store? I don't know. That's right. Lori likes simple options. She even teaches simple options. Last one, and then I'll wrap things up here. Yeah, kids' clothes money. Yeah, it's kind of strange. Target is messed up. And I don't know, Walmart's doing the same thing. It's just, it's strange. This is a very bizarre time, I will say. Tim says, is the banking sector stable now? Still deals out there? ? I don't know if the market is stable. I don't know if I could make that statement. You can look and view these price charts, and let's just go through some of the bigger names, right? So we'll go to JP Morgan. So it looks as if the big swings have subsided a little bit. Yes, there's a lot of chop going on with JP Morgan, but looks like it's stabilized. How about Bank of America? There's Bank of America. Still making some, lower lows, but stabilizing at least on the big sell-off there. Let me get moving average off there and volume off. And, no problem, Margaret. Thank you for always joining the show and sending in your questions and not hating me sometimes when I become a bitter cynic. I know I can be a sourpuss sometimes. But let's look at Charles Schwab, which I am a fan of. SCHW. Charles Schwab, this does not look great. It's lower lows, lower highs. This is a classic definition of a downtrend. For me, it's a question of where am I going to be happy owning Schwab long term. I think they're going to come out of this just fine. But are there still values out there, Tim? Sure. Do you want to go for the stuff that's really beat up? Let's go PNC. This had a nice bounce here for the past week and a half to 2 weeks, but right, still downtrend. Lower lows, lower highs. You could go to Zion, which has had monster jumps here recently. And this thing has gone from $18 to over 30 in a very short window of time. But now is the question of, is it done? Is this just that kind of small pop retracement in the bigger downtrend? I don't know, Tim. I'm not one that is really going to be loading up on bank stocks. There were a few that I was positive on, which were Bank of America, JP Morgan, and Charles Schwab. I have exited all those positions, so I no longer have positions in JP Morgan, Schwab, or Bank of America. So take that for what it's worth, but there certainly would be some in here that are probably decent buys. Oh, if anybody wants a short tomorrow, take a peek at Wells Fargo. Let me make a note for myself. You have a great shooting star up into overhead supply at $42 after a really sharp rally in Wells Fargo. So keep an eye on WFC for tomorrow. Boy, nice. I like doing these ones. It brings some things to my attention occasionally. What else? PFG. Right, Principal Financial. Still downtrend. Lower lows, lower highs. Citigroup. Sideways consolidation. So I guess it really, Tim, it depends what you're looking for. If you're looking for, I want to buy back into some securities I think are going to be great for the long haul, then I think you got to do a little bit of research out there. But yes, I think that most of the banking sector has stabilized. I think the big question is there another shoe to drop? Many analysts, including, I think, was it Buffett or Charlie Munger, was saying that there's more banks that are going to fail here soon. Could very well happen. I mean, they're obviously way more connected than I will ever be, but it feels just by the price charts that things have stabilized. If people were running on the bank, that has stopped. We're not hearing about people running on the banks right now, so we're okay at least with that regard, but who knows. PACW, yeah. PACW. After that monstrous sell-off, I mean, it looks positive right now, but I just can't bring myself to do it. There was so much talk about them going to go into receivership with the FDIC, and that's what caused this big sell-off here. And a lot of people saying this was just people on Twitter and Reddit and social media pumping this down so they could load the boat near the bottom. But I don't know. I say you just got to be careful there. You need to bring J.O. to discuss the possibility of a debt default. We could do that. Let's see if I can get J.O. He loves coming on here. I actually found Rudy on TradingView. Switched to 12-month view before entering the ticker. Not sure if you can trade this one. Ruti. The Russian Terrorism Index? Is that really what? No, I have no idea. I've never heard of this. Don't know what this is reflecting. The Russia Terrorism Index. Wow. Thanks, Tom, for throwing that monkey wrench at me. What the heck am I supposed to do with that? Yeah, I've never heard of this. Now I'm going to probably have to go look at it just so I can entertain myself. But no, I've never heard of the Ruti, if you can trade that. Let's see. Bought PACW at $3 after taking a beating on my... Okay. Well, I guess at least the tough part with PACW is making this statement, are we over or are we not done? It feels like there's a pullback coming. You've had these kind of runaway, nice ballistic move. You're up over a couple 100% from those lows you saw back in early May. So that's great. I'm glad you got some at 3. If this was in my account and I bought it at 3 and the thing is up at $8, I probably would sell it. Just knowing myself, especially today with the gap up and just looking awesome, I would probably sell it and take some profit. Now, I've done that before and watched these things run to $20, $30. So just a matter of what you're happy with. Okay, I'm going to wrap things up. What time we got? 45. So I did an hour yesterday. I'm going to try to slow. It's your friend till the bend in the end, right? I'm hoping I'm having an impact on you, Blue Diesel. Absolutely. Absolutely. I mean, it's still looking pretty weak. And, this, I don't know, the rumors out there scared me with this one. And what was I forgot the other one? Westcom or Westcorp. Okay, let me real quickly go through what's happening out there tomorrow. Oh, Lordstown. Gosh, this is a tough one. So Scott asked, with the split to Lordstown, what happens to my 3,000 shares? So you guys may know Lordstown EV company looks like garbage. You want to see the definition of a garbage chart? Look at that. This is just trash. Even going all the way back, this was a SPAC, by the way, another failed SPAC. It did great. It was at $10 when it started, reached highs of up to $30, and then just drifting lower. Don't buy this thing, Scott. Why did you buy this? I'm just curious. Why did you buy Lordstown? They're going to do a 15-to-1 split. I think it's this week, if I remember correctly. It might be tomorrow. Does it say here on the news? Oh, there we go. Lordstown doesn't say when, but what they're going to do, you have 3,000 shares. So you have 3,000 shares at 28 cents right now. What will happen is you're going to have 200 shares tomorrow at a price of probably, 10 to be 280, of like $3.50 or $4. So the value of your holding will stay the same. Instead of having 3,000 shares at 28 cents, you're going to have 200 shares at $3 and change, and it should be right around the same value there. But bottom line is they just do that to remain compliant with the exchanges because they can be delisted. Honestly, you look at this price chart, they say under $5 should be delisted. Well, this thing's been under $5 for a year, over a year and a half. So this thing should have been delisted a long time ago. They should have done a reverse split, but for whatever reason, they're just slow. Yeah, anyway, stay away from this bad boy, but the split I think is going to happen tomorrow or sometime this week. So don't freak out, Scott, when you look and you're like, holy cow, this thing's at $3. It's not. I mean, it's at $3, but your shares will have been adjusted either way. Okay, so let me go into the economic calendar for tomorrow so I can wrap this thing up. There is a lot of stuff happening on the economic calendar for tomorrow. This actually was for today, so I'm not sure why I have the wrong stuff up there, but this is what happened today. You look at the services manufacturing number, there were quite a few misses out there. Let's go to the U.S. Well, this is all international here. So you can see the U.K., they were worse than expected on their manufacturing and services number. The EU was worse than the previous numbers, but slightly better than expected on services, so not so good. This is the U.S. portion of that. Hold on a second. What's going on? So whoever put my slides together, that would be did this incorrectly. Anyway, this is what we have for tomorrow. Tomorrow for the U.S., you got Secretary Yellen will be speaking. She loves to make waves in our financial markets, crude oil inventories, as well as some FOMC meeting minutes, and that's pretty much it. Oh, you still see this chart. Thank you. Sorry, Lord. Oh, the beauty of me when I get sidetracked. So I'll go back to there's the economic calendar I was referencing with all that manufacturing and services numbers there, so you guys can take a peek at that. I know it's popping over now. Now we've got it back to normal. Sorry, I'm all excited to get out of here and go put together my bike cart, or try to anyway. So that's that's yesterday. Here is tomorrow, or sorry, that was today. This is tomorrow. And again, no big stuff here. Just Janet Yellen speaking at 7:05. Be careful. She has been very open about how the U.S. is running out of money. And who knows what comments she may make, but I have a feeling she's not going to candy coat it. She's going to be like, we have to pass this debt ceiling now or we're going to go in default. And I'm hoping that what would be great and would probably create a lot of chaos in the market is if Janet Yellen made it clear that if we do, this is what we're going to do as a Treasury. And that would be a shock because I think at this point, nobody knows exactly what's going to happen, right? I outlined a couple days ago, these are the things that will most likely happen with regards to a government shutdown. But when we default on debt, what does that mean? Like, who's going to not get paid? It could be pretty ugly. Do we just say, well, we're not going to pay any of that? It's all worthless now? Whoo, that's World Wars type stuff right there. Let's see. And we have a popcorn trade of the day. Yeah, that's right. About time, a little popcorn trade of the day. That popcorn trade of the day, my good friend, NVIDIA, yum. I know, totally wrong commercial. But you have NVIDIA aftermarket close tomorrow, Abercrombie & Fitch, Splunk, Kohl's Stores, and Shoe Carnival. For those who want to dress like a clown, go to Shoe Carnival. I think they just opened themselves up to way too many jokes there. Politicians should not get paid. Lisa, without question, they should not get paid. If they go into a default, You're defaulting because you can't come up with a decision on what we should do. Therefore, you don't get paid. And boy, wouldn't that be interesting at how quickly they would work to get that resolved, because now they would get paid again? And even if they didn't get paid, what they would do is they would vote for themselves, where they could say, okay, we don't get paid while the government's shut down or on a default. But when we finally get things back on track, we'll get all that back pay. So no big deal. We'll just make everybody else suffer. The average American gets to suffer for the misguidance of our politicians. Yeah, they should suffer along the way. Really blows my mind. Hey, J-Bess, thank you for joining us today. Good to see you. And on that note, I'm done. 51 minutes. So much for this 30-minute show, guys. I'm trying to just get down to 30 minutes. I just can't. I love talking. You guys always ask good questions. No guest on this week. It's Tuesday, which means I got a Wednesday, Thursday, Friday for you. If you guys have questions, comments, feedback, like Tom just sent in, which I need to, I gotta run. I'm not gonna answer it. Okay, fine. Damn it, Tom. Why'd you do this to me? What would you think of a company with an 80-year-old CEO and a 76-year-old CFO, and they were hired 3 years ago? Yeah, right? You know, I'm not saying I want to have a 21-year-old CEO. I'd like a guy with some experience and has been there and knows what they're doing. But the argument that we need to have all these old elected officials because of their experience, I think it's fine on one side. But boy, you tend to get people that just don't understand new technologies, new ideas, innovation, evolution of markets. They don't get it. They're used to their ways. I mean, hell, you look at Mitch McConnell, he still probably thinks his house should be like Leave It to Beaver. Probably has his wife staying home and cooking food all day long because that's what they did back in the 30s, 40s, and 50s. Not today. Anyway, see, but Tom, it's all your fault. You guys can blame Tom for my little rant about Leave It to Beaver. My apologies. Anyway, hope you guys have a fantastic remainder of your day. Email me at TraderMerlin@gmail.com with comments, questions, suggestions. Thank you to those who did send in questions. So, and a shout out to Scott for your Lordstown comment, Tim for the banking sector, Margaret for the ETFs, and Armin for the forecast for oil. That, my friends, will do it. I will see you all tomorrow. Take care.